Well, last week, AOL's co-founder Steve Case announced that he and his two partners raised $450 million in a new fund called Revolution Growth to invest in later stage startups on the East Coast this time. Case is also a member of President Obama's Jobs Council, has been there for several months, and joins me now. Steve, great to have you back on the program.
It's good to be back.
So, Steve, I was reading through some of these reports or some of these stories about this new fund, Revolution Growth. And I know you and Ted Leonsis and Don Davis have put together a total of $75 million of your own money into this fund. How much have you actually personally put, though, into this fund?
The majority of that $75 million I personally put in. I really believe in the idea of speed ups, not just startups, but speed ups funding these companies that are already showing some momentum, but really have the potential to be, significant global iconic platform companies. And working with Don and Ted on this has really been going to be a great opportunity.
Now, Steve, you've invested, of course, in a lot of early stage companies, Living Social, Zipcar. Why this time focus on later stage companies, though? What exactly is the reason behind that?
We'll continue to do that. We have a group called Revolution Ventures headed by Tig Savage, who does a great job identifying those earlier stage startup investments. But what we've found is there are a lot of companies that get to a certain stage and really have significant potential but don't have the growth capital. So this Revolution Growth Fund is designed to write those $25 to $50 million checks that really enable a company to kind of turbocharge their growth rate and really capitalize on the market opportunity. So for us, that's really the main event, what we think of as speed ups. But we'll continue to invest, led by Tig, in the earlier stage startups as well.
But does that pool get smaller and smaller, though, Steve? Because I imagine if some of these companies make great candidates for later stage fundraising, I imagine the early investors that got in want to hang on, right, to their own shares in that company. So doesn't the pool then get smaller and smaller?
Well, certainly there's a lot more startups than there are speed ups, but we're going to be very focused. We said last week that we're only investing 2, 3, maybe 4 companies a year, and we're not going to just write the check. We're also going to spend a lot of time with them. That's part of what we enjoy doing, is working with the entrepreneurs to help build these great companies. So you have to be very selective, but we do think there are opportunities, and not just in Silicon Valley. Silicon Valley obviously gets a lot of attention. There are a lot of great companies created in Silicon Valley, but not all companies are created in Silicon Valley. So Living Social, we backed, is based here in D.C. Revolution Money we backed was in Tampa, Florida. Zipcar is in Cambridge, Massachusetts. Ted Leonsis personally was involved in Groupon there in Chicago. So I think we're seeing the rise of the rest regionally and other entrepreneurial ecosystems developing, and that's something that we're going to try to capitalize on with this Revolution Growth Fund.
Steve, you're going to make your first investment in the first quarter of 2012, right?
Correct.
And what kind of company would we be looking for here?
Well, not surprisingly, after spending almost 20 years building AOL and trying to make the internet part of everyday life, and most of the last decade working with this next generation of companies like Zipcar and Living Social, it'll be in that realm. Consumer-oriented companies, really empowering consumers in new ways, using technology, trying to disrupt the traditional business model. And we think there's big opportunities there because when in difficult economic climate, the big companies often play defense and entrepreneurs play offense. There's a difference between what I've called attackers and defenders. We want to back the next generation of attackers, really attacking large industries that are really ripe for significant change.
Steve, I'm glad you raised Living Social because, as we talked about, that's been one of your early investments. Watching what has happened with Groupon and how the stock has done since the IPO, it's below its offer price. Does it make it less appealing for Living Social to go an IPO?
Well, I'm not going to comment on Living Social's IPO plans. I'll let Tim O'Shaughnessy, the CEO, done a great job there, kind of talk about that. But I really do believe in this sector of social commerce. I think companies like Groupon and Living Social are well positioned, not just on the daily deals business, which is where a lot of the focus is, but how they've turned into platform companies and have used that brand and that audience and that technology and the permission to send emails to people to launch into other verticals like an escapes for vacations and other things like that. So I think it's shifted from being a daily deal business to being a much broader local commerce, social commerce business, and that's true for Groupon as well as Living Social. So I think we're relatively early in the evolution of this whole sector, and we're we've been very proud to see what's happened with Living Social. We got started, it was 4 guys here in Washington, D.C. Now they have over 4,000 employees.
Yep.
As we look to drive more job creation in this nation, having more companies like that really can grow rapidly and create lots of jobs is obviously critical, not just as an investor, but also critical for our country.
Let me get to talking about another industry or another sector that creates jobs, which is supposed to be Washington, the White House and Congress. Now, I know you are a member of this council. What is the biggest reason why CEOs are not turning their cash into jobs? What's the reason?
Well, first of all, I wouldn't say Washington creates jobs, but Washington does create the environment that enables companies in the private sector to create jobs. And the question is, are they taking the right steps to maximize that opportunity, or are they doing things that sort of slow things down? I think, in terms of your question, I think CEOs all around the country are a little nervous about the future and looking for more certainty, including from Washington. Some of the problems in the last few months in terms of this partisan kind of gridlock, I think, has disappointed people, frustrated people, made people a little bit nervous. And it's time, I think, for both sides to come together. Thankfully, there is one topic where there seems to be willingness to come together, which is a pro-entrepreneurship agenda that we've been pushing initially through the Jobs Council and also some other private sector-led efforts like Startup America. We really have to unleash the next wave of entrepreneurship if we're going to get that job creation engine working again.
But Steve, how conflicting has it been, though, to be on the council and have some of the CEOs on this council be cutting jobs and not hiring?
Well, there's a couple dozen folks on the council, and they've spent a lot of time on this, led by Jeff Immelt, the CEO of GE, I think, who's done a terrific job. And we've divided into a number of different areas. The part in particular I've been focused on is the high-growth companies, the entrepreneurship side of things. And I've been very pleased with the level of interest and support for the initiatives that we've put forth. So I'm grateful that people have taken time out of their pretty busy schedules to spend time focused on trying to get the nation back to work. And thankfully, there's more and more focus around, particularly the role entrepreneurs have played in building this nation and will play in creating jobs for the future.
Steve, great to see you again. Thank you for joining me, Steve Case.